a lot of people are focused on the downstream device. Who's going to be the next big electric? Who's going to be the next Tesla? Or who's going to be the next Panasonic or CATL in terms of the battery manufacturing? But before I worked for the government, I worked in the chip industry, and we expect this to go just like the chip industry, where cost down will be king, and cost down will come from innovations in the supply chain and in the adjacencies. Things like fast charge, things like power electronics on board the vehicle, new ways to make batteries, all the way upstream to mining lithium. So while a lot of investors tend to be focused on those very downstream devices, the truth is lithium is king, and it will be for decades going forward, just like oil and gas has been king for a century, just like silicon has been king in the semiconductor industry, and yet created trillions of dollars of wealth by modifications and wealth generation in the supply chain and in the adjacencies. So it's going well. We're finding a lot of good tech.
Where does lithium come from, and then how are you investing in that?
Yeah, if we go all the way upstream, let me start by saying that there is no better time for investors in the private markets, and this is a counterintuitive thought from what you read in the mainstream media, investing in the kinds of technologies that we're investing in, because the needs of the end users are increasing. And by needs, I mean lowering costs and improving performance. There's a reason 1 week ago today, the Biden administration put in tariffs that are 100% for electric vehicles coming from China. That happened because the U.S. automotive groups lobbied for that to happen. They know those cars will sell. A lot of the mainstream media says nobody wants to buy electric vehicles. They just leave off the second phrase, unless they're lower cost.
Right.
But when we go all the way back up to mining, it's notable what the big companies are doing. Last fall, after I was here talking to you, Paul, actually, Exxon announced that they want to become lithium suppliers. And the way they're going to do it is to leverage their own, downhole and refining capabilities, and to adopt and scale something called direct lithium extraction, or in my industry they call it DLE. It's a new way to extract and refine lithium, and it's like it sounds, it's direct. If you can remove process steps and use less water, use less energy, you end up with a lower cost production. So prices of lithium in the market have been fluctuating substantially these last 5-6 years, where the cost of manufacturing has stayed the same.
So where you guys would play in that, for example, like I know that's Exxon's investment, you'd be investing in the technology that would make direct to mining lithium work.
Precisely. In our Fund 1, we invested in a company called Summit Nanotech in Canada that is now scaling in Chile with one of the big lithium suppliers to supply that tech to lower the cost.
When you go when you go further up the supply chain, is that where it lands for you in lithium? You're not looking at like graphite or cobalt or other stuff?
Yes, thanks, Alix. They claim, Paul and Alix claim they don't know a lot here, but they clearly do. Yes.
Oh, no, I know a lot.
Energies are.
Who said that?
Maybe it was Paul. That's great.
Wasn't firm.
I'll speak for Alix.
That's just my Midwestern heritage speaking there, modesty. But the answer is we look at it all. Graphite, it's fascinating. Even graphite, there's not only a tightening on the supply, but it's mostly in China. So there's massive moves for the supply chains coming out of China being localized for cost reasons as well as geopolitical reasons. But we look at it all from graphite, cobalt, sulfur actually is a technology that can be used in batteries, lithium, and then downstream from that to things like new microchips that enable power control and can lower the cost of electric vehicles.
Do we need to be concerned about the security of the resources for all these electric vehicle components? Like, are they in China that's a risk, or they're in parts of the world where it's a risk to the U.S. and others? Is that a risk?
The short answer is yes. There's a longer, more nuanced answer. Graphite and lithium in particular, depending on which material you're talking about, 80 to 95% of it's processed in China, but it's not sourced in China, which means there really is an opportunity, especially with the advent of technology that lowers manufacturing costs, to move that supply chain out of China because the resource itself is not in China. However, magnetic materials, the core called rare earth elements that are used in magnetic materials for electric motors, most of that is in China. So there's been a 10 to 20 year research effort in the Western world to develop new magnets that don't require rare earths. And those are all going to be coming commercial in the next 3 to 5 years as well.
I was talking to a graphite producer yesterday.
Who doesn't?
And he was talking about the tariffs that were put on. I know you mentioned EVs in particular, but then the nuance of, say, the raw materials going to Canada or Mexico And then because we have a free trade agreement, they just come into the U.S. And so there's a huge price discrepancy versus, what you're willing to pay for localized materials versus how cheap China can get it. How do you solve for that? Because that's really going to be about lowering the cost, which is really technology, which is really you.
It's really a good question. And not being a politician, I don't know how to handle it from a policy perspective, because there are loopholes that you can go through in Mexico and Canada, et cetera. Ultimately, the answer is things like graphite. There's graphite all over the world. The largest graphite mine in North America is in Bécancour, north of Montreal, and that's natural graphite. There's also something called synthetic graphite, where you can manufacture the graphite from carbon, and there are big oil producers that are looking at doing that as well, right, to grow their business in that direction. So in my view, as a technocrat and as a technology investor, it is find the innovations that can lower the cost for localized supply. And I think there'll be bumps in the road between now and adoption of that technology in terms of what's happening worldwide in geopolitics, but I think ultimately it's localized supply that will win the game.